we press on, we press on, we press on. So just to make sure that I'm being heard clearly, uh, by show of hands, how many of us can actually hear me? Uh, okay, now that is nice. That is nice. That is nice. Welcome to our webinar today. I'll be taking us through the webinar today. I'm Timothy Muya, and I'm very sure that you're going to have a pretty amazing time. So we are in safe hands. Yeah, we are in safe hands. I know most of us are in the hustle and bustle of filing returns, and it can be such a daunting task. And the main essence of today's webinar is actually to just to have a go through of the requirements that we're supposed to, the requirements that we are supposed to put in mind while we are filing our returns today. So it's going to be exhaustive, and I'm pretty sure that by the end of today's webinar, we'll be a little bit or absolutely conversant with the requirements, with the procedures, and also with the mistakes that we're supposed to avoid while filing returns. As shared in the screen, in most cases, a tax return filed in a hurry is like basically proposing marriage on a first date. Yeah, it might work. It might work. But more often than not, someone will be asking the difficult questions 3 years later. And as far as KRA is concerned, it's even up to 5 years. So you don't want to be in that situation. So to avoid that, I hope by the end of today's webinar, you will be in a better position to file your returns better. And for those of us who have already made a draft, you will actually go and review them before uploading them to see if all these aspects have been captured. Yeah, so let us press on. So basically today what you're going to do, we are going to have a brief review of how the finance bill and the circular from KRA affects our the returns of 2025. We shall also look at the key documents to have that you should have before you're filing, how to file employment and income returns, employment income return only, and how to file income tax returns, and basically the common challenges in 2025 filing season. So a few weeks ago, KRA issued a public notice, which basically said that for the year of income 2025, the filing of the returns must be completed by 30th June 2026. We have like around 12 days to that. So, and one of the other things that they said is those who fail to file returns by the 30th of June, they will be subject to a default assessment. I will have a brief preview of what a default assessment is. And also what the circular said too, that for those of us filing 2025, we are allowed to claim expenses that are not ETIMS supported, but that will not be the case for 2026. So yeah, we were given an allowance that we can file, but we're supposed to upload a CSV for the same, and also the supporting documents, or rather the receipts, the non-ETIMS receipts. So basically the implication of the KRA notice, how it affects businesses, they will, according to the circular, there will be no extension beyond 30th June. Last year, due to system failures, an extension for 5 days was made, but it is not something that you can bank on. So there will be no extension. Also, if for late filing, if you will not have filed your returns by the 30th of June, there shall be a default assessment. And basically, one other thing that they said is 2026 transactions must be eTIMS, so team supported. So we have been given a grace of filing returns without eTIMS, but still you have to identify or rather outline them and send the receipts. I'll be showing you on how you're going to do it in the later stages of the webinar. So in our interactions, in whichever platform you are in, ask your questions. I will be answering some of the questions, and also my co-host will be answering some of them. I hope it will be more of an interactive session. If you've got any questions, any clarifications, be sure to ask them. And if you've got any issues or you're actually filing the returns, book an appointment with us today. So we'll be able to take you through and ensure that your returns are up to par. So the question today is, why is it that filing has become a high-risk exercise? To answer this question, I'll look at some of the changes that will affect as far as the Finance Bill 2026 is concerned. Our very able, or rather, our very honorable, or rather dishonorable members of Parliament passed the Finance Bill, whichever way you take it. The Finance Bill was passed yesterday, and in due course, the President will, of course, it was passed with some amendments, and in due course, the President will assent to the bill, and it will be it will become the Finance Act of 2026. So one thing that is very clear in the finance bill that affects basically our returns for 2025 is if the taxpayer does not file complete, accurate, and timely returns. KRA increasingly has the tools to file, estimate, validate, and enforce compliance on their behalf. So basically, there's a growing power, the commissioner's growing power under the TPA, especially in the Finance Bill 2026. The Finance Bill 2026 basically focused more on tightening the loopholes and increasing the powers of the commissioner rather than increasing taxes on commodities. So the commissioner has been given more power, and it will really affect how we file our 2025 returns. So I look at three ways in which the commissioner, or rather the finance bill, will affect the current returns that we are doing. So number one, the commissioner as per both the circular that I gave, I showed, or rather from KRA and also the finance bill, the commissioner has been given power to make default assessments. And the thing is, many taxpayers assume that if they do not file a tax return, KRA will simply wait indefinitely. Unfortunately, that is not the law. Because if we look at it under Section 29 of the TPA Act, it clearly stipulates that when a taxpayer fails to submit a return, the commissioner may make assessment based on such information that is available and determine the amount of taxes payable by that taxpayer. So it is not a new law that is coming in. It is rather more of an implementation of an already existing law, of the existing law. And especially in this era of autopopulation and its visibility, we can be pretty sure that it's going to be not going to be a pretty sight. So the challenge with default assessment is it rarely works favorably to the taxpayer. It is rarely favorable to the taxpayer. And KRA is not required to estimate conservatively. Of course, that is, you can take that to the bank. It only needs to act on information available to it. Because some of this information, it might be the third-party information, the eTIMS data, or rather the pre-populated data. So KRA has the ability to do that. It really has the ability to do that. And they can look at the custom import declarations. They can look at withholding tax certificates. They can look at banking information. And they can look at government procurement records because of IFMIS. They can look at the prior returns of the other years, or rather even the industrial margins. That is if you're in a certain industry, they may look at that industrial margin and compute taxes according to the industrial margins. Also, there's third-party intelligence. It might be a supplier, it might be an employee that is not contented. So it is something that KRA can never really fall short, have a shortage of information that they can base to assess you. So the commissioner has been given increasing power, and also we have the pre-populated returns, which is basically the next evolution. So basically what the finance bill proposes, it proposes to amend section 75 of the TPA, allowing the commissioner to generate pre-populated returns for the taxpayer. So I'd like us to think what this means. Today, taxpayers prepare returns. Tomorrow, KRA may already have a draft return waiting for you. Basically, that is what we have seen when filing these returns. Because when you're filing the income tax returns, KRA already gives you a pre-populated data, both for sales and purchases. So it is up to you to categorize them. It's up to you to confirm them. It's up to you to verify them. So basically, without you inputting any figure, KRA already has the data. So imagine a situation whereby the KRA uses the eTIM cells to make a default assessment for you without giving you a chance to actually claim expenses that are not eTIMS compliant. We live in a largely informal sector, informal economy, whereby getting eTIMS receipts is actually not easy. So imagine KRA just using your sales to make a default assessment for your returns. It is not a pretty sight. So KRA will pre-fill your revenue, withholding credits, installment taxes, import values, especially with the integration of ICMS and the VAT data. So basically, they will have all the data, and having default assessment from pre-populated returns is going to hit you hard. So taxpayers, you can rely on that data, but you have to amend them, and so that they constitute the actual position of your business. So the question is, should taxpayers blindly accept pre-populated returns? Absolutely not. KRA information is only as good as the data available to it. Taxpayers have you still remain responsible for the accuracy of those returns, because as far as KRA is concerned, they'll always make assessments on the higher side. So it is up to you as the taxpayer to verify and ensure the accuracy of the data produced by KRA. Another aspect that has been affected by the Finance Bill 2026 is failure to file electronic returns, which is basically what iTax is all about. So many participants may not actually appreciate that filing electronically is no longer merely a convenience. It is actually a statutory requirement now. The TPA Act requires us to make returns electronically through basically all the systems that have been prescribed by the commissioner. So if I could take us back a little bit, you see, historically in the TPA, Section 86 of the TPA imposed a penalty where taxpayers actually failed to comply with the electronic requirements. So the Finance Bill 2026 proposes a repeal and replacing Section 86 and introducing a much harsher penalty regime. So the proposed, this is the proposed section, this is the proposed Section 86. Basically, it says that where the commissioner determines that a taxpayer has failed to issue an electronic tax invoice or submit a return electronically or pay taxes electronically, the commissioner may first issue a notice requiring the taxpayer to explain the non-compliance. So in your explanation, so that your explanation is accepted, you must demonstrate that the failure was beyond your control. Failure to file by the 30th of June was beyond your control. That failure was not due to willful neglect. That you actually took reasonable steps to comply, but it became impracticable. Let's say, for example, the system hangs from the 29th to the 30th. And if that is the case, I would urge all of us, for majority of us Kenyans who are last minute filers, when such a system happens, ensure you actually take a screenshot of the failures of the system. It might help you as evidence, help you demonstrate that it was not on your side but their side. And also, if the commissioner is not satisfied with the explanations, if the commissioner rules that you did it out of willful neglect, that whatever happened was not beyond your control, then the taxpayer becomes liable to pay the higher of, number one, 2 times the tax due. Initially, it was just the tax due, but now this time is 2 times the tax due. Number two, 100,000. That is for a corporate, and 10,000 for an individual, whichever is higher. So I'd like us to just to think about this for a minute. I'd like us to think about the implication. So let's say, as per the KRA's data, the sales that came into your account were, let's say, 2 million Kenyan shillings. Those were the eating sales. And if you are, especially for those of us in the service industry, you do not have purchases. So most of them, they are expenses. And imagine that your expenses are not ETIMS compliant. So as per KRA, there was actually a revenue of 2 million that came in. And by some reason, you failed to file your returns on time. You did not file your returns. So what does this mean? KRA will use that 2 million. KRA will use that 2 million to make a default assessment for you. So if you fail to demonstrate that it was beyond your control not filing, 30% of 2 million, that is 600,000. So you're supposed to pay a tax of 600,000. Besides that, now the finance bill now says you're not going to pay 600,000. You're going to pay twice the tax that was liable. So that means from the revenue of 2 million, the tax that you will be liable to pay will be 1.2 million. This is simply because the penalty is linked to twice the tax due. So I do not know which kind of business will be running whereby you get a revenue of 2 million and 1.2 million on taxes. So basically, this is a very dramatic departure from the traditional late filing penalties. So I beseech you, my fellow taxpayers, do not wait for KRA to make a default assessment. Do not wait for KRA to make an assessment based on the pre-populated data. Do not wait for KRA, because it's basically passed to, based on that, to make you pay taxes twice as much. And probably this is the reason as to why you're in this webinar, and it's going actually to help us to avoid that. So, and apart from not filing on time, and apart from the finance bill implications, which is soon going to be the Finance Act, what are some of the mistakes that you're supposed to avoid when filing? That will be our next part. I'd like us to look at some of the mistakes that you're supposed to look at while you're filing, so that's to avoid KRA's focus on you, or rather KRA's issues down the line. And before I do that, I don't know if we have any queries. You can ask your questions. You can ask your questions. I will answer some of the questions. My co-host will answer some of your questions. So let us keep on engaging. Let us keep on engaging. Let us keep engaging. Yeah, Alex is saying that is punitive. Yeah, it is. It is. But currently, that is the law. Currently, sorry, the bill has been passed by Parliament. We'll wait and see which amendments actually went through. And also, after the finance bill has become the Finance Act, we will actually come and tell you how. We'll actually come and tell you how it will affect your businesses and how you can be readily prepared for it. So Daudi is asking what's the difference between a default assessment and a special table assessment. Default assessment is basically what I have explained, whereby KRA will just use the available data to make an assessment for your returns. The special table assessment, initially it was broad, but currently it has been limited to missing traders. Missing traders is whereby you are vatable, but then you do not have a lot of inputs, a lot of inputs. So you decide to get receipts from missing traders, or rather, there are times whereby you might have receipts and the suppliers are deemed as missing traders. So that is one of the reasons you can be put into a special table and an assessment can be done. It is basically, it will be more of a review that will be done to you. So basing on some, in most cases, the VAT that you had claimed, or rather the income tax in the expenses that you had claimed in those invoices are going to be disallowed, and you're going to pay the resultant taxes, both for VAT and for income tax. Jen is saying that injustices, can they also stop corruption? I pray they do. I pray they do. Because I actually believe that in Kenya, we do not have a revenue problem. Our problem basically is a management problem. A lot of people are willing to pay taxes, but a lot of people who come to me are asking, so why would we declare the entire taxes and it's just going to be misused? So it's a long shot. It is a long shot, but we can just hope and pray that everything turns out fine. Because actually there is little that we can do. But what we can do is do our fair share, find our returns and file them well. Because whether the monies are going to be used for corruption or not, they'll still come for your neck as far as KRA is concerned. So yeah, so I'd like us to look at the mistakes to avoid while filing. Number one, filing nil returns when you have actually earned income. And this is basically one of the pitfalls that a lot of taxpayers fall into. So you have income from business, rental property, consultancy, farming, side hustles, commissions, online work. But at the end of the day, you file a nil return. Because KRA will kindly but surely ask you, yeah, we do not refuse that you have filed nil returns because you do not have pay. But in your NTSA portal, it shows that last year you bought a car. Then they'll go ahead and tell you, yeah, we believe in miracle working God, but please explain to us what kind of miracle this is. And if it's the same Jesus who paid taxes, so who are you not to pay taxes? Or rather, they'll ask you, from the land registry data, you actually bought land last year, but you have claimed nil returns, man. You have filed nil returns. What kind of business is that? So in this era of visibility, it's actually becoming harder and harder. You're filing nil returns and you have like 3 meters from KPLC. Where did that come from? You're filing returns, nil returns, and basically in your iTax portal, it shows that you made some purchases. What kind of returns are those? Or rather, you want to put nil returns and you have withholding certificates. So it is more of it's a matter of declaration, and declaration does not necessarily mean payment. Declaration means that you actually acknowledge that you earn that income. There are those of us who earn below the threshold of 24,000, And they usually say, no, because I don't pay I don't, actually, I'm supposed to file new returns. The answer is no. We're supposed to declare the same. Because basically, KRA has your data that you paid housing levy. So basically, you declare the income, and you don't necessarily have to pay. Or rather, you declare a business income, and if you actually made a loss, you won't pay taxes on losses. So let us be very careful to avoid that mistake of filing new returns, especially where we have earned an income. And I would say time and time again, compliance is mostly a cost until KRA comes after you. Compliance will seem as a cost, compliance will seem expensive until you have a very amazing love letter from KRA. And of course, they'll have to call you dear. Yeah, but what follows next is not so dear. So the era of using your cyber guy, the era of finding some shady piece people who would fight for you for 200 shillings. I think when you find the letter, that is when you'll actually know the real meaning of cheap is expensive. So before you find your returns, whether by your own or by someone else, please seek expert opinion. Another mistake that you make is leaving out sources of income. So you find that we declare one source of income and we ignore others. You'll find that I run different businesses, but I decide to declare only a few. Or rather, I have two jobs. I have a primary employee and a secondary employee, but I tend to declare only income from the primary employer. Sorry. So if you have got two employments, if you have got a primary employer and a secondary employer, you have to declare both incomes. All your business sales have to be declared. All your rental income, it has to be declared. For those of us who run businesses and have rentals, you have to declare both incomes. Because I'll tell you this. It's only a matter of time before KRA comes for you. It's only a matter of time before your business is visible. It may not be this year, it may not be actually next year, but KRA has the authority to look at your books for the past 5 years. So if we have this kind of technology, this kind of visibility in 2026, imagine 2030, how it's going to be. And now it arrives in 2030, and now you're being asked for data from 2026. How ready will you be? How confident will you be? So yeah, for those of us who are primary employers and you have got professional fees or other side hustles, which will with time become visible with KRA. And I'll say this, declaring your income does not necessarily mean paying taxes, because you're actually allowed to claim expenses that are related to it. Then again, I'll urge all of us, seek an expert opinion. Another thing is entering wrong P9 details. And I have seen a few or more cases. I've actually seen a lot of cases where a person who has been employed at the end of the day gives someone to file their returns. And if you'll find that the person does not either claim personal relief or the pension contribution or the insurance relief, at the end of the day, you'll find that yourself, you have actually tax that you're supposed to pay. And you wonder why, you wonder, how did that come about? So this will eliminate from actually entering the wrong P9 details. And as I've said before, as I've reiterated before, just because it's in the KRA system does not necessarily mean that it is the 100% accurate. We found out that, especially for those of us who are filing employment income early in the year, actually the returns for November and December had not yet been updated. And you'll find that a person files and they pay their taxes. The employer actually remitted the pay, but you'll find yourself that you're having a tax that is payable. So it is very important that you ensure that whatever is in KRA system and whatever data you have been given in your P9 form by your employer, they actually match. Because a small error can create a wrong tax payable for a refund, which will actually invite a review. Another mistake that most of us do, we claim expenses without actually proper support. So reducing income using expenses that you cannot prove is usually a very fatal mistake. Just because they arose in the ITR2 return form does not mean that you're supposed to fill them and pay zero taxes. You're supposed to actually substantiate, because your receipt you should have for expense to be valid. You're supposed to have receipts for the same. You're supposed to have invoices for the same. Your bank statement should actually prove that you actually incurred that expense and you actually paid for it. Some of the times, KRA will ask for you for the supplier records, especially for those purchases, and also the proof of payment that the payment was actually done. And also sometimes they ask for the expense schedules. So the thing is, if you cannot support it, be careful before claiming it. And I know 2026 moving forward is going to be a very uphill task, because if we can take KRA's word that 2026 they're not going to allow any non-ITIMS invoices, then you'll find we are actually courting trouble, because the tax payable for 2026 will be very, very high. So I know most of us are asking. I usually ask, what about for those of us in sectors where we cannot find supporting ITIMS support documents? I know it's going to increase the cost of doing business, but just because a person who has no ITIMS is selling to you something cheaper does not necessarily mean that you're going to try to get more profit. In most cases or not, you'll find that the amount of money that you're going to use in your taxes will be more than what you actually, the profit that you made or the amount that you saved while purchasing it. So please ensure, unless it's unavoidable, unless it falls under the category of those items that are actually allowed for non-ITIMS, please, I urge you, do not fall into that temptation. Ensure that you have ITIMS receipts. We might assume that KRA is going to ease the rope a little bit next year too, but that is subject to confirmation. And if you think it is actually impossible for KRA to actually make a stand and stay with it, let us take us back to when auto-populated for VAT returns happened for the first time. In most cases, we never thought that it was possible, but one day KRA just said enough is enough. And it closed the ability for you to claim invoices that were not auto-populated, and that was it. So you never know what happens in 2026. That might be the case. So, and in the eventuality that that happens, how ready are you? How ready is your business to actually be buffered from its effect? Another mistake that we do when we're filing our returns is we wait until the last minute. Yeah, we wait until it is the last minute. Typical Kenyans. I know currently KRA has actually extended its opening hours, and also even on Saturday, because they basically understand that we Kenyans are last minute people. But my question is, um, and it's actually in one of the forums that the commissioner asked, is you're filing new returns. Why should you wait until June from January? You're filing employment income only. Why should you wait until June 30th? It's basically submitting it. It is a risk because you have the risk of iTax delays. System might hang. You have a risk of missing documents that you cannot find them on time, especially in this era whereby you're supposed to upload them. You run a very high risk of actually having wrong entries. And in this era of validation, it is not something that you want to be in. It is not something that you would admire to be in, because it will send you error messages after error messages, and you'll find yourself not being able to file. We have rush filing. You rush in your filing. You make mistakes. Assessments are done, and you pay penalties, and you pay additional taxes. Then you have late penalties. We have seen what Finance Bill 2026 has in store for us late filers. So yeah, let's really avoid that. Also, we have like, there will be automatically poor review before submission, because you'll be doing it in a hurry. You'd have adequate time to review your returns. You not have adequate time to review the uploaded documents, and that will be it might have a trigger that will cause unnecessary assessment, especially from KRA. So this is what you do. I know it is only 12 days before, but I know it's already becoming late, but file early. And before you file, review before you submit. And before you do that, if possible, give another person to see it from a different perspective, just to review and upload. Because even the best of us make mistakes. The best of us grow fatigued. The best of us, sometimes things bypass you. So if it's possible, give someone else your returns, just so that they can look at it from a different angle and see if you have captured everything, to avoid a lot of unnecessary mistakes. Also, some of us will file returns, but we will not pay the taxes due. We file our returns, but will not pay the taxes that are due. So whereby you will file your returns, then most of us will say, especially in the recent past, usiniwekee nil eka, lakini eka pesa kidogo nilipe. So even hiyo pesa kidogo unaita kwa system. I hope it will be among one of the amendments, but KRA is in case of a liability, because most of us hardly look at KRA's data, KRA's letters. One of the proposals in the finance bill was, if you have a tax liability and you are not paying your tax liability, you do not have a payment plan in progress. Normally, historically, what has happened is KRA has been issuing agency notices to banks, but there was a proposal that it extends even to all financial avenues, even to mobile money. I do not know which categorization they're going to use to ensure that it's actually the taxpayer who has got that phone number. But I'd like you to imagine the worst case scenario. Most of us never look at our emails. KRA sent numerous emails to you. about paying the taxes that you're supposed to pay after filing your returns, and or rather paying the balance of tax. Then they decide to issue an urgency notice. And as per the proposed amendments, you wake up one day and then your bank account has been frozen. And if they go to mobile money, your M-Pesa has been blocked until you pay that. And umeamka asubuhi, umeenda kwa matatu ya wenyewe, umepanda, unajaribu kulipa, because actually most of us nowadays we rarely do cash. You cannot access your money, you cannot access your bank. I am not so pretty sure if the Makanga is going to accept explanation. But let's avoid that. Pay the taxes. If you cannot pay the taxes, go and meet your tax manager. Your tax manager will help you come up with a payment plan to consolidate all the tax balances or tax liabilities in your account and you actually pay. So let us be very careful. Avoid that mistake of actually filing a return and not paying the taxes due, rather the balance of tax after the installment taxes and the advance taxes have been removed. So after filing, please check on this. Is there tax payable? If there is tax payable, have you generated a payment slip? After you've generated a payment slip and downloaded it, have you paid? And the upside about this is most of the time they're actually automatic. After you've paid and then you look at your ledger, you'll actually see that the amounts are actually reflecting in your ledger. So it's only then that you'll have peace. And provided your credit and your debit side in your ledger, KRA iTax ledger match, then you're good to go. Or rather, if you have got more credits, then you're good to go. But provided there is something payable, it is, you are not safe. You are not safe. So in everything that we do, let us ensure that we pay the taxes after we file our returns. And then number 7, filing returns without help when the return is complex. I think I have already mentioned this. I think I have already talked about this, because this will really go a long way to help you avoid a lot of issues with KRA. If you are unsure, please get guidance. If you're not so sure about what is supposed to happen, please seek guidance. And yeah, to make things easier, because it's actually going to cost you more if you file returns without, or if you file the returns wrongly, or if you input your data in a wrong way. So apart from the mistakes that we have looked at, what are these other filing mistakes that actually taxpayers make? So I'll tell you this. In my experience, supporting taxpayers through tax audits, through objections, through reviews, through appeals, very few disputes begin because the taxpayers intentionally evaded taxes. Most of these disputes begin because annual returns had inconsistencies. Returns were prepared the last minute, documents were missing, credits were claimed incorrectly, some of the income was omitted, expenses cannot be substantiated. And what appeared insignificant during filing becomes very significant exposure several years later. I often say that KRA rarely gets concerned by a taxpayer paying little taxes. They actually become concerned when the story told by your returns do not make sense. That is usually the largest red flag for KRA. That is usually the largest red flag for audits. If your story does not make sense, if your story does not, if the story being given by your returns do not actually make sense, then it is an invitation. It's actually an invitation for KRA to actually do an audit for you. And for those of us who have been through KRA audits, it is not a pleasant experience at all. It is not a pleasant experience. So, and the first step of doing this is actually ensuring that your returns have been done correctly. And before I look at these other mistakes, I'll wacha tuliko maswali tuangalie if there is. I can see that my host is actually engaging, even for those of us watching, rather in our other social media pages, be it TikTok, be it the Teams, be it YouTube. I'll urge all of us to ask your questions, and we are more than ready to answer them. We are more than ready to answer them. Here I can see that you have been answered. I can see most of your questions. I can see most of your questions are being answered. Yeah, let's continue engaging. Let us continue engaging. Let us continue engaging and asking the questions, the comfortable and the not so comfortable questions. You rather ask and be answered than assume and get yourself into problems, or rather than assume and get a love letter from KRA. Us telling you that, oh, my dearest taxpayer, we appreciate you for doing your returns, but we just need a verification. Yeah, so until then, you'll not be smiling so much. So yeah, let us avoid them. So let us to go to the other mistakes, other filing mistakes that we make. The other mistake is we claim withholding taxes without recognizing revenue. Most of us, after we have declared some revenue, we go back to look at the tax payable, and then you see it's very little amount of money. Or rather, you're filing your returns and then you see you have a refund because of the withholdings that were made during the year. So we actually go on and make, or rather we claim those withholding certificates, or rather withholding amounts, and we pay taxes. So this is what some of us do. This is what a lot of us do. Let's say, for example, you offered services. You offered professional services, for example, and the amount of withholding taxes that were, let's say you did it in an upward of 1 million Kenyan shillings. I think when you use examples, it will stick more. So from 1 million, the person who was paying you withheld 5%. So 5% of 1 million is 50,000. So in your accounts, you have a credit of 50,000. And so what most of us have been doing, most of us have been actually declaring an amount that is amounting to 50,000 that is payable, so that the amount of tax paid is zero. So my concern is, if the withholding taxes, or rather the withholding certificates, amount to 50,000 shillings, the minimum amount in your returns as revenue should be 1 million. Because KRA will basically go on and they'll just take the certificates and then work backwards. Just because you declared initially, the audit risk was non-claiming of the VAT certificates. But nowadays, some of us have gone a notch higher, or rather a step higher, or rather I'll call it smarter. Okay, it's not so smart. So, because ideally from the 1 million, the amount that you're supposed to pay, the 30% is supposed to be 300,000. That is assuming that you do not have any expenses. Of course, if there are expenses, it will come lower. So, but instead of 300,000, you end up paying 50,000 because you're not declared the 1 million Kenyan shillings. You go on claiming around 450,000 or 300,000, so that there might be something a little bit payable, but is not the correct amount of income. So, a very important point to note: if you have got any withholding certificates, income certificates, ensure that you work backwards. Ensure that you download that certificate, and I think you'll see it is one of the items that you're supposed to have. You have those certificates and you look at the gross amounts. Some of those gross amounts of all your income certificates, then that will be your income. So claiming withholding taxes without recognizing revenue is actually a red flag. So the taxpayer, you will find that the taxpayer will claim the credit, KRA sees it, the credit actually exists, the income is either absent or understated. Basically, there shall be a return because it is inconsistencies. So let us be very careful while dealing with withholding amounts. Then let us be very careful about that, because it is a trigger for KRA to actually review your items before it gives you an additional assessment. So let us be very careful. And another thing, or rather another aspect, is ignoring directors' current accounts. Perhaps this is the most overlooked item, because in some cases we use directors' accounts to actually balance the balance sheet. But one thing to note, directors' accounts actually tell a story. Sometimes they tell dangerous stories. Because I'll give you an example. So let's say the director's loan balance, let's say in 2024, was, let's say, like 3 million Kenyan shillings. Then in 2025, because you want to balance your accounts, the director's loans need 42 million. So there has been a whole movement of 39 million Kenyan shillings. So the question KRA will ask, where did the 39 million come from? Did it come from a bank loan? Where is the evidence? Were there dividends? Was it an inheritance? Did you sell a property to find that? Is there any other undeclared income from business that will arise from that? Was it a loan? Where are the agreements? Where is the supporting document? See the kind of stories that your director's account tell. Where are the board resolutions for such a facility? Because for a bank loan, there has to be a board resolution. So even the director's loans, there has to be a resolution and agreement for the same. Shareholders would have to approve that. So you see, without explanations, these balances become very difficult to defend. These balances become very difficult to defend, and they would end up paying a lot. One other thing that most of us do, or rather the people who file company returns do, we file company returns, and then at the end of the day, we file nil returns for directors, or rather just the amounts that have been declared qua payee, that is the amount that we declare. The question will be, the directors purportedly injected the business with a loan of 10 million Kenyan shillings. That is what in the director's account. But in the director's personal KRA PIN, there were nil returns. Where did he get the money? Which loan, which bank facility, which bank issued a facility of 10 million Kenyan to someone who has got no income? So when KRA comes and starts asking such kind of difficult questions, that is when you will know the severity of such kind of accounts. So let us make sure that we put very keen consideration on those directors' accounts, and to avoid a lot of unnecessary issues. And I will say it again, seek expert advice. And unfortunately, just because someone has been in an accounting class doesn't mean that they're experts. Seek expert opinion which is tested and proven to avoid a lot of unnecessary issues with KRA. And then we have got related party transactions. A lot of family businesses actually frequent advance monies to companies, or rather among companies, or even between themselves. Directors lend funds, companies share employees. So you find an employee works for the same related companies. Company occupy, let's say, even the common premises. Payments between the companies have been made informally. There are no agreements that have been made. There is no interest that have been charged on funds that have been transferred. There are actually no disclosures. So for tax purposes, taxpayers should disclose these relationships, because transparency actually, in most cases, reduces suspicion. You are in one compound, you've got two companies which are related, you share the same facilities. At the same time, when it comes to capital allowances and wear and tear, both companies claim them. You see, we have a problem. So it is very important to disclose related party transactions. And if there are loans, put an interest on them. I think we are being loud and clear. I think we are being swift enough. I think we are being thorough enough. And also, I hope you are being keen enough. A copy of the recordings will be shared, and I know my co-host will send a registration link whereby you can get a copy of this this webinar, just to review it before you make a fatal mistake that's going to cost you or your client a lot of money. And then we have failure to reconcile revenues. Failure to reconcile revenues. Okay, I don't know, by show of hands, I don't know how many of you have tried filing returns as far as the new system is concerned, the pre-populated data for income is concerned. I don't know what kind of issues you guys are facing. I don't know which kind of issues you guys are facing, but I'll tell you this. You're not supposed to take KRA's data for as low. Just because it comes from KRA does not necessarily mean that it's accurate. You have to reconcile your revenues. You have to actually reconcile your revenue, because failure to do that, it will be a very audit trigger. But and of course, if you do not reconcile your revenues, it will actually not going to show. It's not actually going to update. So I'd like us to look at an example of such, and what can be done. And also, as I will be showing you how an example on how to file your returns, I'll actually show you on how you can resolve matters as far as duplicates are concerned. Yeah, I'll show you. And let's look at an example. So assume that you run a business, and the revenue declared is 110 million. At the same time, when you use your VAT returns to compute your sales, it reflects 135 million. At the end of the year, when your ETIMS data gives you 142 million. So ETIMS inakupatia 142 million. VAT data gives you 135 million. And your supposed revenue is around 110 million. So immediately you'll find that these are three very completing or competing figures. So in such a circumstance, what do you do? Yeah, you might have explanations. Some of them might be exports. And when it comes to exports, especially for those of us who deal in fresh produce, you might export sales of let's say 1 million, and by the time ishapita kwa boda imeenda ikafika huko, and then let's say 100,000 worth of your produce is bad. So basically, what do? You produce a credit note for the same in your system, but the data between what's in the export, what's in the ICMS as far as exports are concerned, and what you have are different. It is a very valid explanation, and it actually makes sense. But if you just rely on one set of data without reconciliation, it might actually bring problems. So exports, you have credits, we have got timing differences. One of the major reasons for these variances currently is we have a lot of duplicates. The advantage of the duplicates are that when you make your adjustments and you try to upload it, the system automatically removes the duplicates, but you have to adjust it by yourself first. You have to actually make the adjustments first before you upload. And if you make an adjustment actually lower than the duplicates, the system is not going to accept. But if you focus on those duplicates and you remove them, the system is going to accept. So let us ensure that you reconcile your revenues and also your expenses as you file your returns. I will in a little bit explain on how you can do adjustments as far as the duplicates are concerned, Also, we have seen situations whereby there is one single receipt. Let's say a case example, the supermarket receipts, right? The supermarket receipts, you'll find that you have purchased commodities that are vatable, some of them are not vatable, some of them are zero rated, all in the same invoice. So you'll find that three categories of items fall within the same invoice number. They are all claimable for income tax purposes, but it shows they are duplicates. So in such a circumstance, what do you do? Just hold on. I'll tell you what you're supposed to do. Before we look at filing, so before you file, I'd like just ensure that you have these documents. Number one, have your P9 form from your employer, right? Sure, ask for your employer to give you a P9 form for the taxes that have been paid, as far as the taxes that have been deducted and paid, as far as pay is concerned. Bank statements and M-Pesa statements, it will help you categorize the amount that came in as loans, the bank charges, the loan repayments, the loan balances. So ensure that you have your bank. It will help you reconcile to avoid variances. Also, you ensure that you have got business expense support, especially for non-items expenses. Ensure you have got all your purchase invoices, your receipts, all the supplier invoices. If you are renting, ensure that you have your rent receipts. If they are not items compliant, ensure that you have the physical ones. Also, have your expense schedules. Ensure also to have your withholding certificates so that you can, as I have explained earlier, just work with the gross. Going backward, ensure that the minimum amount of revenue that you're supposed to declare is the summation of those income tax, those grosses in your certificates. So in most circumstances, and I've seen, I have seen this a lot of times, because in most cases, taxpayers will often come and tell us, KRA has not asked for these documents. So why are you so insisting on them? We might even do, let's say, for example, a health check. And then in our report, we say that we did not have this and this receipts, this and this documents, we do not find them. And you might find that we are actually doing a health check for returns for like the past 3 years. So the client will come and ask, KRA has not really asked for these documents, but our response is always the same. Smoke detectors are also usually very quiet until they are not. Those of us who are viewers, let us hear, let us be keen. I hope we've understood what that implied. I would not want to call it a smart joke, but yeah, if you've gotten it, you've gotten it. There's something called the Smart Taxpayers Boardroom Test. In this season, before you file your returns, run this test. I'd like you to actually run this test before you before you click the submit button. So the question is, or rather, the statement usually is, before you click the submit button, imagine presenting the return before a board meeting. The question is, would you confidently answer every question? Before you click the submit button, imagine that you go before the board, you're in a boardroom and you're making a presentation of your returns. Would you be able to answer all the questions? Okay, let's just for a moment test ourselves. Let's begin with revenue. Does the revenue agree with the financial statements? That is number one. Does it reconcile with ETIMS? Have you analyzed and considered all the credit notes? Have you separated the exports? If any, has there been consideration of the exchange gains? Have you declared all the income as far as data available is concerned? When it comes to expenses, ask yourself this: are your personal expenses excluded? I have seen this time and time again. Most of us tumeambiwa na our accountants and our auditors, please make sure whichever place you go and buy stuff, give your PIN. Give your PIN and ensure that umepatiana PIN na umepatia items invoice. We do not feel that is okay. But I'd like you to imagine this. Most of us, what we're currently doing at in the supermarket, while we are getting our own household goods, we give the company's PIN so that inakuja kwa, it comes as a claimable expense kwa items later. But the question Kerry will ask you, yeah, this is a very legit invoice. But sasa, uko na hardware, ulinunua parts za kufanya nini? Uko na hardware, steel wool, hatukatai. Okay, for those of us, to be fair enough, for those of us who, especially sisi wenye tunatoka the Mount Kenya region, tunapenda nimesahau jina yake. This beans, if I remember them, I'll mention them. That is how much I don't like them. But kuna foodstuffs and you are running a hardware store. If you cannot substantiate that they were used for businesses, then they have got no business being in your books. The other question is, have you adjusted for depreciation? Have you, in your returns, have you actually adjusted for depreciation? If not, then there is a problem. And the provision that you've given, are they deductible? So if I may ask you, my people in this webinar, are donations are allowable? Provision for bad debts allowable? If not, if they are, that is, how do you account for them? I am actually waiting for the answers to that. I'm actually Yeah. Yes, yes, yes. Robin Omeka, thank you so much. Jahe. Yeah, I probably for those of us from the mountain, Njahe, probably wakiona Njahe hapo watasema, yeah, this is a hardware item. Yeah, it might be allowed. That is if God gives me the grace to be a commissioner. If I see your returns and I see Njahe in your returns, I'll absolutely um, allow them as part of. In fact, I'll make them taxable so that you can claim VAT on them. Yeah, thank you so much. Yeah, I can see it is we are really engaging. Yeah, so someone has said yes, they are allowable if they are from institution registered. Um, so I think it is an area where you can go and do your research on donations and the difference between a donation and a sponsorship. It is also very important because one does not necessarily mean the other. So as a as a as a takeaway, find the difference between a donation and a sponsorship, and if they are allowable or not. So yeah, I'll not give you an answer to that. Although you can read in the chat box and see which side you agree with the most. Agree with the most. Yeah. So yeah. So and when it comes to the balance sheets, in the balance sheets, are your loans supported? Because I'll tell you this. One of the areas where KRA usually comes hard on are loans. Any loans that are not substantiated, they're usually the interest that has been claimed as far as reduction of the taxable income is concerned, they're usually disallowed. So in your loans, are they allowed? The loans that you have declared, are they supported? And have you clearly explained the director's account? And these assets that you have claimed are capital allowances that you have claimed were and IBD and ID on, do they really exist physically? If they do, the documentation that is there, is it in line with the company? Because most of the time you find that there are vehicles which are in the name of the directors, owned by the directors, but used in the company. So you claim the fuel, you claim repairs, you claim wear and tear, but the name of in the logbook belongs to the director and not the company. There is a distinction between the owner and the company. There is a distinction between the director and the company. So ensure that all the assets that you have claimed, actually you have declared in your balance sheets, have the documentation that's actually on the company. Those of us dealing with companies. And also in your asset schedules, disposals, were they considered? Ama you disposed an asset, but you went ahead and claimed wear and tear on them. So let us be very careful. As far as credits are concerned, do withholding tax certificates reconcile? And the installment taxes that you paid, are they all visible in your accounts? And if there were any previous year credits, have they been considered? So those are some of the boardroom tests. If you can confidently answer all those questions, then I give you my blessings. File your returns by all means. I give you my blessings, file your returns by all means. Finally, I'd like us to look at one last part on filing the income taxes for 2025. It is more of a demo. This time around, I'll just deal with the income tax for businesses. And because I think this is where most of us really go. For those of us who have employment, what you do from the page that is actually currently visible, you'll go to returns, and then you'll go to ITR returns for employment income only. When you click there, you will find pages where it will give you all the data that KRA has for you. First of all, you compare the data that is in your P9 form with that is in that's in iTax. If they match, adjust for the pension contributions. Currently, the personal relief itakuwa pre-populated, itakuwa already filled. So, and then you just submit your returns. In case unapata there is an amount that is payable, please seek the advice of an expert. I hope we are clear. So before I look at income tax filing, probably I can look at probably answer one or two questions. But the advantage is we have a very more than able co-host who has been answering your questions, majority of them. I hope you are contented with the answers. Let me see if there is any question. If there is any question, but I'll ask you that. I'll request you to do this. I'd like you to go online and actually type expenses that do not require items for validation. It will give you a list of all the expenses that necessarily does not require validation from items. From salaries, wages, from air ticketing, and a whole of that list. So just to be sure, we might not answer all the queries, the particular queries in this more than short webinar, but please ensure that you just do that. Just do that, and you'll find the comprehensive list. And someone is asking how they can get the recording. There is a link that's already been shared. Just register, and the link will be shared to your email. So, and also a link to the YouTube page for this recording. You will find it so that you can review it. Please review it before you find your returns. So Javik is saying, my friend started his hardshop business in 2023, and the business was registered with KRA. The man had never filed KRA returns, and the business has been doing pretty well. His M-Pesa statement and bank statements is showing the cash flows. So my question is, can he apply for a tax waiver on amnesty for him to be forgiven and start filing afresh, since he wanted to transfer the business to his father by changing his name to his father's name? So but my question will be, has he been filing returns? If not, is he in the threshold for VAT? If he has not been filing returns, what he can do, he can file the returns for 2023 and 2024, and even 2025. with the advancement of the finance bill, there is a class on tax amnesty. Hopefully, it has been retained, whereby when you pay the principal taxes, when you pay the principal taxes, you have actually qualify for an amnesty. So my advice would be, let him file first. Let him file for 2023, 2024. And if there are any principal taxes that have been paid, ensure that he pays them. And mwambie angoje 30th, after 30th, or rather from 1st July, after the finance bill has become the Finance Act, he can apply for the waiver. That is after he has paid the principal taxes. And then yeah, the balance will be clear. Then after he has done that, he can transfer the business to the father. But the only upside side that I can see is if the person has reached the threshold of 5 million in a year and he did not register for VAT, that would be a problem. That would be a problem, but you can reach out to us. We might help you. We will help you navigate through that. We'll help you navigate through that. So do not worry about that. And yeah, and continue asking your questions. Yeah, continue asking your questions. By more than able, I can see time is not so much on our side. I'll just rush through, or rather, I'll just go through the how you can file your returns. So for those of us who are filing returns, and I'll advise you on this, the best way to approach, especially for businesses, the best way to approach the income tax filing, ensure that you have the audited books. It's easier to file from the books that have been audited. And I know the time is far much gone as far as filings are concerned, but ensure that you audit your books, then you use that data to file, to upload. It is easier and more verifiable, because in case of a review, KRA will ask for audited books. So for those of us filing, if assuming that you have done your audited books, or even if you haven't, you would just you'll log into your iTax portal, and then you'll go to the third tab, which inasema returns, and then you click on file returns. So after you file your returns, it will bring you to this page. So the obligation, it will give you the type, the taxpayer PIN, and the obligation. And then the obligation, now because we are doing annual returns to take income tax for company. And so you choose the dates that you're filing, so that is for last year. And if you've got any rental property, you will click yes, because you have to declare your rental property. So basically what happens, it will basically what happens when you come to this page, you would come and click to download an income tax form. You'll click an Excel form, and then it will bring you to this page. This is the downloaded version. One thing that is important is, for those of us who are not in business, under the business type, you have to change the business type, if it is a society, if it's an NGO, if it's a charitable organization. But the thing is, it will only be exempt if you have an exemption certificate, because the exemption certificate has to be validated. So for those of us who have got exemption certificates, you will not necessarily be required to you're not going to be required to validate your expenses, but the catch is you have to the catch is you have to have a withholding certificate. I hope that is clear. You have to have a withholding certificate. So when you come to the business type and you choose a charitable organization or an NGO or society, you will not be required to your expenses are goods supposed to be validated. So also in the income tax file, sorry, in the returns file, on the very last page, you will see that if you had any withholding taxes, it will show the amounts. It will show the amounts there, and it will actually be the tax refund due if no adjustments have been made. So ensure that your withholding certificates are visible. And also, if you have had any installment taxes, there is a sheet for installment taxes. We'll see that all of them have been pre-filled. So after you have downloaded your ITR2, what you're required also to do is, especially for those of us who have manual or rather non-ETIMS invoices, non-ETIMS expenses, what you're required to do is you come to your returns page. You come to your returns page, and then on the very bottom, there is income tax return adjustments. And then you select non-ETIMS invoices. It will give you a sheet that I'll show you momentarily. Then again, for those of us who have, you remember earlier on I told you something to do with, initially some time ago I've told you something to do with duplicates as far as purchases are concerned. So this was the issue. In your purchases, a single invoice had 3 items: a vertible item, an exempt item, and a zero-rated item. So in the list of the auto-populated data from KRA, they will appear as 3 different invoices, different amounts, but same invoice number. So if you upload it as so, KRA is going to delete, or rather iTax is going to delete the duplicates. But in reality, they're not duplicates. They are just invoices with different amounts, but same invoice number. So what you do in such a case, the adjustments can be made in the accounting and accrual adjustments as far as they're concerned. Also, we have situations whereby, this is the case example. You have a withholding. Let's say you did business in December or November, and then you're paid in January the following year. So when you are declaring your income for the previous year, let's say in 2024, you actually declare that you actually declared that income because you invoiced in December, but you were paid in January, and it was withheld in January. So picture this: you have already declared that income, but coming the following year, the withholding certificate actually the withholding certificate is produced on the following year. So if you're not careful, because in most circumstances, KRA will follow the certificate date. If you do not make adjustments, you will find that you'll be required to declare that income again, which is not entirely right. So make sure that you make those adjustments under the accounting and accrual adjustments. Making the right adjustments, validation is going to be easy. So let us ensure that we do that. make the necessary adjustments, and then it will be easier. So as we were talking about non-items, you'll come to the third tab, you come to returns, and then you come to the income tax return adjustments, then you come to manual and non-items invoices. After you do that, it will bring you to this page, and then you'll select the year that you are, the accounting period that you're filing for, and then it will bring you this. So where the arrow is pointed, you will click here to download the CSVs. As you see, as you can see under these two, we have upload CSVs, the completed CSV, and the supported documents which have been scanned. The current size allowed is 10 MB, so you have to scan your receipts, you compress them, and then you attach them here. So you come to upload CSVs, then you click here to download the schedule. The schedule usually looks something like this. And currently, KRA has allowed for us not to input the supplier's PIN. So in your different invoices, non-items invoices, you come to this sheet and you write the supplier's name. You input the invoice number. You input the invoice date, the description, and also the amount. An example can be, let's say, the supplier name, Kamau and Sons, the invoice amount, the invoice number, you put the invoice number, the invoice date, you put the date which the supply was done, the supply description, you can say what you supplied, let's say supply of Njahe, and then you put the amount. So one of the things that you have to be careful about is actually the format of the date. If your date has to be the most common, it is DD stroke MM stroke YYYY. That is date. If it is the first, it is 01. If it is January, it's 01. If it's 2025, you write the whole amount 2025. Any different formats, it's going to bring errors. So ensure that the amounts, or rather the amounts that have been claimed in your expenses and the amount that has been claimed in your expenses should be the exact amounts of the sum of the items compliant expenses plus the non-items compliant expenses. I hope I am clear with that. The whole summation should be the items compliant expenses plus the non-items compliant expenses, which are filled in this manual. The only variance that is allowed are those items that do not require item validation. Those are the human resource. An example is the human resource expenses, the salaries, the wages, and so on. Apart from that, we have got the bank interests, we have got the bank expenses, the banking charges. But besides that, any other expense that is not items compliant should appear here. And it should appear here. So let us be very careful. And for those of us who have a lot of data, and you realize that most of your data is in are duplicated. I don't know. I don't have an Excel here, but what you can do when you open up your Excel schedule, when you open up your Excel item schedule, on the ribbons, look for data. Under data, there is data tools. Under data tools, there is remove duplicates. I'll say it again. When you open your Excel sheet, normally, on the ribbons, these are the items that are usually on the topmost row. We usually have home, we have file, we have home, we have edit, and just look for where it is written data. After you've gone to data, look for an item called data tools. Under data tools, there is an item called remove duplicates. So highlight the row that has got the invoice numbers, and then you click the word remove duplicates. Especially where expenses are concerned, it will help you remove all the duplicates. But first of all, you have to identify the duplicates that are there, but then removing them, especially for those of us, you might find that someone has, let's say in a supermarket or a high volume business where there are hundreds of thousands of data. You cannot go individually removing all the duplicates. So the easiest way to save time, just go there, just go on your Excel, you go to data, you go to data tools, and then you go to remove duplicates. I hope I'm making sense. Yeah, so ensure that you fill this file exhaustively, and then ensure that your supporting documents are ready for upload. So you upload both your CVs, your CSVs, and your supporting documents, and also the values that have been adjusted in your ITR form. Ensure you come and fill them under the tax computations. You look for a sheet that is written tax computations, and then you come and fill for manual and items. Then we'll have accounting adjustment for income. You remember what I told you about the withholding taxes. After you have adjusted, the amount that you have adjusted for, you come and input them here. And also for accrual adjustments for expenses. Yeah, so the stock adjustments, the different provisions that are adjusted for. And the same, if I can take you back, it has to be on, yeah, accounting and accrual adjustments. That is where they're usually found. You make the necessary adjustments, and then you file after you have uploaded both the CSV and the supporting documents. So you make the adjustments over here, and then the tax computations, after you have done all this, should show the exact position of the business and the tax that is payable. I know it is not an item that can be covered in one single sitting, but I will advise you this: before you bank on assumptions, before you bank on what you might do, please seek an expert opinion. I hope I'm right. I hope I'm clear. So as I finish up, this is my advice for all of you. File your return in such a way that if KRA knocks tomorrow, your first reaction is to offer them tea, not to call your accountant, auditor, informer, from finance manager all at the same time. I hope we've heard. We have our taxation masterclass. We have a taxation masterclass that will be in September. The dates will be confirmed. We have both the physical training and the online training. It is very easy for you to make assumptions until KRA comes knocking. If I had a dime for every time that someone told me that they never knew that they were supposed to do such anything, that they're supposed to file a tax in such kind of a way, then I think I'll be rich enough to personally sponsor the Ebola site. I'll be very rich. So to avoid that, we have a taxation masterclass. We actually go through all the taxes, all the tax laws. We cover the income, the Income Tax Act, the Excise Duty Act, the VAT Act, the TPA, and the adjustments that we made with the adjustments that are there with the current finance bill. We are going to teach you on the tax procedures on how to file all kind of taxes. We're going to teach you about tax triggers and tax planning and tax strategies. We're actually going to cover everything that concerns taxes. So the physical class is 50,000 for 3 days. The online training is 25,000 to run for 2 weeks. So if you're curious enough and if you want to be taught by actual experts, come into that class. It is one of the few classes that I say it's a money back guarantee. If you feel like it was a waste of time, in some circumstances, if you can prove that it was a waste of time, we'll actually give you back your money. But it's a very good avenue to come and learn. So let's do that. Also in November, we are having an audit and bookkeeping masterclass. As I've said before, filing starts from audit. So how can you best do this? How can you best ensure that your books are kept in a way that even without the tax expert, you can actually hand them over to KRA? We are having a masterclass on audit and bookkeeping in November. Come and be an expert on accounting and audit. The charges are 50,000 for physical and 20,000 for an online class. And in most cases, I have said time and time again that documentation and good bookkeeping is actually the cornerstone for to avoid tax issues with KRA. So with that in mind, with the experience that we've had with a lot of people, with the loopholes that we have seen in the current systems, we came up with a system that actually covers you. We came up with a system that actually protects you from a lot of these pitfalls that actually most businesses fall into. And the good news is we have actually customized them into particular sectors in the economy, depending on your business, depending on what business you undertake. It can actually be customized to fit into your business needs. And after I'm done, I'd like you to give us just 5 minutes for our My Accurate Books experts to take you through just for a few minutes on how the system works and how you can actually benefit from the system. So we are at WK. We also offer financial services. We do health checks of your data, of your returns, and health check of your records to ensure that just to give you a preparation on if KRA comes. We also do audit services, especially for this return period. So look for us, and we are going to help you. So I'd like to thank you so much for being such an amazing audience, and let us continue interacting. Let us continue interacting. Let us continue with the conversations in our socials, and also please fill in your details in the link provided, and we will send you the recording for this for this webinar. Otherwise, thank you so much. I'd like to welcome my my colleague who will take you through my accurate books. And yeah, in case of any queries, you're free to ask, and please reach out for any consulting services, and have an amazing afternoon and be blessed.
Also, I want us to take less than 5 minutes. I just show you an overview of my accurate books, and then from there we can be able to continue the engagement through the different social medias, WhatsApp, Meta, and also a phone call. So if you can see my screen, you can drop a thumbs up. Are you able to see my screen? So I wonder if you can see my screen, you can. Just a minute, I share my screen. Resolving how to share my screen. So as I check on that, so I just want to give you an overview of my accurate books. It's an accounting, it's a bookkeeping system, which you can be able to use to track on your sales. You can be able to track on your purchases. It has the purchase management. It has the expense management. And also today we have rolled out the e-teams on the system. So currently the system has the e-teams, so you can be onboarded with your e-teams credentials into the system. So that is a feature that we have been able to roll it out today. So from now you can be able to generate e-teams accredited invoices. So I'm trying to fix something which is I'm not able to share my screen, but I'm working on it. So from the system, you can now henceforth be able to generate e-teams invoices. So the moment you are onboarded with your e-teams credential, you can be able to have that. So and also, so basically the system is protecting for bookkeeping. Just a minute. Hello. Okay. Sorry, I was correcting an issue with my computer, but now I guess it's okay. So I'll just take you through my ECREATE-Books. Just a minute, I share my screen now. I think everything is okay. So hope now am I audible? Can you hear me? Just a minute. So I hope now you can be able to see my screen. So this is my ECREATE-Books, the bookkeeping software that you can be able to incorporate it in your business, and then you can be able to manage your books. So if you can see my screen, you can share a thumbs up. I want us to take less than 5 minutes. Just take you an overview of the system. So basically, my ECREATE-Books is a bookkeeping software, which it's a cloud-based system, which you can be able to use it on a mobile phone, your computer, or your iPad. So it is easy to navigate. You can be able to manage all your business transactions using a mobile phone, also, or your computer. So some of the key features of the system is about basically tracking the bookkeeping part of the business. So the system has the inventory management, where you can be able to track about your different products and services in the business, and also it has the POS, that's the self POS, whereby you can be able to generate receipts, quotation, invoices, and credit notes for your customers, and also receive payments from customers. There's also the purchase management, whereby you can be able to track on different purchases from your suppliers, and also the different transaction of all the money in and money out of the business. Then on the expenses, you can be able to track on different expenses of the business. And also on the customers management, you can have a list of your customers in the system. So that again, if you want a customer statement, you can always be able to read the system. Or do banner from vendors to your customers, and be able to maybe send promotional messages to your customers of maybe a new product or a new service you're offering, or maybe a discount you're running. And also, you can be able to generate all the accounting reports from a balance sheet, cash flow, trial balance, general ledgers, and also generate the normal reports, profit and loss reports, inventory, customer balances, creditors, and also debtors report. And then when it comes to the user management and permissions, you can be able to have different people using the same system and have different assigned permissions, so that again you can be able to protect some information from being reached who are not supposed to see particular informations. And also on the branches, you can be able to have multiple branches on the system and make each particular branch as a business entity. And also, if you are running multiple companies, you can also have the only business management, whereby you can be able to manage the multiple businesses on one account. So I'll just log into to my account, and then I can have an overview of how a live account looks like. So just a minute, I'll log into my account, and then I can have an overview of how a live account looks like. So a minute, share the screen again. I guess it has dropped. Just a minute again. A minute, I'm trying to log into my account. I had some network challenge, and a few, and I'll be able to be back. Okay. So this is now my account. So a minute, I log in. So basically, this is our live account looks like the moment you log into a live account. So just a minute it loads. So as of today, we have rolled out the eTeams feature. So this is now the outlook of the eTeams feature. So how it works, so the moment you log into your account, you can be able to request to be onboarded on eTeams from My Accurate Books. So after requesting, you'll be conducted and you'll be helped on how to be able to onboard on eTeams with your particular account. So basically, that is a feature that we have been able to roll it out today. So from now, you won't have an issue about generating eTeams invoices from our system. So basically, this is the outlook of our system, My Accurate Books. And we usually offer trainings. That is, we can, whenever you are interested in our system, we can be able to offer you a virtual training that is within 10 to 15 minutes, so you can understand how the system operates. And so that when navigating becomes easy, so the dashboard just gives you a clarity of how the business is performing from sales expenses and also the daily tracker. Then on inventory, products and services, whereby you can be able now to have your different items and services that you are offering on the system, so that again you can also be able to have a tracker of the different items that you're selling. So it's something that you can be able to have on the system of the different products that you sell or the services. So the system is meant for either you are dealing with products, manufacturing, services. You can be able to use the system to do a daily transaction, offer those particular trainings, offer those services, or sell products. You can also be able to do stock transfer from one branch to the other, and also you can be able to stock take using the system. Then on the sales part, you can be able to generate receipts and invoices, do quotation, create a credit notes, and also receive payments for maybe customers who have paid partially. Then on the purchases bit, on the management of the purchases, you can be able to generate purchase orders to your suppliers, create purchase record purchases, create a debit note, and also have your suppliers on the system. So that again, you can generate a supply statement and also pay your different suppliers. And then on the transaction, you can be able to see all the transactions within the business. And also external transaction, that is if you are using our AccuratePay wallet to do from expense management, can be able to import the transaction on the system. So for easy reconciliation, and then on the expense management, you can be able to have different expense categories that you have, and also you can be able to add different expenses in the system, so that again you can be able to track on the much money you have that has been used in managing the business. So that again you can be able to track on the different expenses, how much has been paid, how much is still pending, and also on the accounting, you can be able to have different accounting reports from the cash flow, balance sheet, trade balance, general ledgers, asset management, charts of account. You can be able to create different charts of accounts into the system. So that becomes easier for accountants to generate their financial reports, and also the normal reports from just a minute. The normal reports, you can also be able to have them, the inventory, the profit and loss, customers reports, that is either the data and also the customer balances and also collection, and also the sales report you can be able to generate from the system, and also you can also generate the ESG reports using the system. And then on the user management, you can be able now to add your different users of the system, and also limit on the areas they can be able to access the system. And also you can be able to deactivate employees who cease to work with you. And also if you have a particular question, you can drop it on the chat box. I'll be taking a few questions in a moment. Then on the branches, again, you can also be able to have multiple branches into the system, so that again, you can be able to track each particular branch on its own. And then on the billing is whereby you can now be able to choose a package that you want to use in the system. So we currently have 2 packages, but we are rolling out the third package at the start of July, which is a customization of a particular, if you have a particular way you want your system to look like. So you'll be able now to look into customizing you a system that fits only your business. So the current packages that we have are the standard and the gold package. So on a yearly plan, the gold goes for 9,000. The standard goes for 5,500. Maybe the key differentiating factors between the two packages is more on the accounting reports and also the multi-business management aspect. So on the standard package, you can not be able to generate the accounting reports. That is the asset management, journal of entries, general ledgers, balance sheets. So those are available on the gold package, and also other accounting features. And then on the multi-business management is only available on the gold package, whereby you can be able to run 2 or 3 multiple companies at one account at one cost. So you can be able to manage multiple businesses under one account, because each company is different from the other. So you can be able to have that on the system. And also the number of branches it can accommodate more. We have up to 10 branches. So we are just from 8 to 10 branches. And also the number of users who can use the gold package more, that is 20. On the standard package is 8. So those are some of the key features of the system. So if you would want also to do your virtual demo, you usually offer that, which is free of charge. We are not paid to train you on how to use the system. We train for free. Within 10 to 15 minutes, we can be able to help you navigate through the system and also understand it better. So I'll take a few questions from the chat box. And also you can fill in the form or reach us out on 0116 333 000. So you cannot reach out to us on 0116 333 000. And also the great feature that we have been able to input into the system today is on the items that now you can be able to integrate your items. Rose, you have asked about the subscription. So on a yearly plan, it's 9,000 for the gold package and 5,500 for the standard package. So it is a customer-friendly package, so you can be able to navigate through. And also you can reach us on 0116 633 000. So that again, we can be able to also continue with this conversation, take you through the system, and also so that you can be able to understand it better. So 0116 333 000. How have you worked on the bank reconciliation? On the bank reconciliation, also we are pushing it at the end of this month. So as we start the next financial year, all the aspects will be up and running in the business. So we are finalizing on the items. We have been able to push it out today. So you can check out for more updates within the week. So we don't have an audit software. What we have is a bookkeeping software that you can be able to manage the system. Collins, you're asking how do I pay for the system? You can just log, if you had created an account, you just log into your account, and then you can just select on the packages, and then you can choose the best package that will fit for your business, either the gold package or the standard package. But I will reach out after this meeting. I guess Collins, you have an account with us, so I'll reach out after the meeting on how to subscribe. Yes, we have a manual. I'll also forward the manual on your WhatsApp, Mr. Collins, on how to use the system. I'll be able to forward after this meeting. So if you have a question, you can also drop it on the chat box, so I'll continue answering them. So if you have a particular question, again, you can be able to reach us on 0116 333 000. So the system, you can be able to use it for product-based business, manufacturing, services, hospitals, and also hotels. And also maybe for you run a school, you can be able to use that particular system. So it is a comprehensive system, and now with the more features we have been able to add, it becomes more comprehensive, especially with the items and also with the new financial year. It is something that we had to factor in. So you can be able to check out on the different features that will be running out this week, and also we are planning to also to roll out on the payroll at the end of this week. So it's something that you'll be able to have it on the system. So those are some of the key features that we are rolling out at the end of this week, and also we have been able to incorporate the ESG reports on the system. So we are adding more features on the system. So reach out on 0116 and then or drop us a message on 0116 333 000, or go to our website myaccuratebooks.com, and then you can just submit a ticket, and then we will be able to get back to you, take you through the system. And then through that way, we can be able to have a better books for our business as we start the next financial year. The software packages are two currently, the gold package and the standard package. The gold goes for 9,000 per year. You can either be built on a monthly basis, quarterly, semi-annually, or a yearly plan. So gold is 9,000, a standard is 5,500. If you have a particular question, you can reach us on 0116 333 000, or drop a message on WhatsApp, and then we'll be able to get back. So for now, those are maybe the particular question you had asked about the system. If you want the system, again, we usually offer virtual trainings about how to use the system so that you can be able to understand it better for your business. Thank you for your time, and we appreciate for you for taking this time to join the training. We meet up again next week for more insights on KRA trends, and also more insights on our bookkeeping software, and also the new features that we'll be able to roll out at the end of this week and the next week, so that the system becomes more comprehensive to run your business, and also generate reports, generate your taxable returns and all that. So it's a comprehensive system. So in case you have a particular question, drop us a message on 0116 333 000, or call us, or go to the website and so just submit a ticket, and or download our application on Play Store, that is MyAccurate and then now we can be able to take the conversation to better understanding. Thank you, and have a good afternoon.